The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Scorebox. It's Monday morning. These are your headlines. Iran's state TV confirms the death of the president Ebrahim Raisi and his foreign minister in a helicopter crash in the country's northwest. Interest rate optimism fueling a record rally in global equities, with Asian stocks touching a two-year high. This after the Dow closes above the 40,000 level.
Taiwan's new President Lai Ching-te is sworn into office, repeating calls for both sides of the Taiwan Strait to pursue peace.
I hope that China will face the reality of the Republic of China's existence, respect the choices of the people of Taiwan, and in good faith, choose dialogue over confrontation, exchange over containment.
Ryanair's full-year results just crossing the wires. We'll talk you through the numbers and the impact of Boeing delays with the airline's CFO, Neil Sorahan, at 7:15 CET.
Iran's president and foreign minister have been killed in a helicopter crash in the northwestern part of the country. State media says all passengers were, quote, martyred. Search teams battled blizzard conditions using drones and dogs to find the wreckage after Sunday's accident. And state TV paused programming to show prayers. Dan is in Dubai, leading our coverage on this story. Dan, just tell us the latest as we know it.
Steve, good morning to you. Good morning, everyone. Well, Iran's president and Iran's foreign minister are confirmed dead. Iranian state media confirming that news early this morning after rescuers were able to locate the helicopter crash site only a few hours ago. And of course, this news could have significant implications, not just on domestic Iranian politics, which has now ultimately been thrown into disarray, but also on regional stability as well. In terms of the core details, what we know so far is that at least 9 people were on board the helicopter when it crashed. Of course, the president was inside along with the foreign minister and a number of their entourage as well, after we saw the senior government leaders actually attending a function in Azerbaijan. Now, as it stands, the president and his officials were returning from a region on the Azerbaijan border in the northwest of Iran, about 600 kilometers, I should say, from the capital. What we know is that it also took rescuers several hours to reach the crash site because of bad weather and heavy fog in the area where the helicopter went down. Of course, a lot of questions now about the impact on domestic politics and more broadly regional stability. But one thing that is important to get across right now is, just given the amount of information being thrown around on social media, the Senate Majority Leader Chuck Schumer in the United States says that U.S. intelligence authorities have informed him that there is no evidence of foul play in this helicopter crash. He says, and I quote, "It was very bad foggy weather, northwest Iran, where the copter crashed, so it looks like an accident, but it's still being fully investigated." Of course, the immediate focus now is on how the Iranian proxies, of course, the Houthis, Hezbollah and Hamas will respond. And also plenty of questions domestically as well about how it came to be that these two very senior government officials in Iran were on the same helicopter at the same time, traveling at that time of day in these weather conditions. In terms of what's going to happen next, though, of course, Raisi is the elected head of the government, but of course he answers to Ayatollah Khamenei, who is the head of state. So now that it has been confirmed that he has passed away, according to Iranian law, power will transfer temporarily to the vice president, and then there's going to be an election in a period of 50 days or so. But of course, important to also take a step back and underscore that this crash also comes at a very difficult moment in the Middle East. We have the war raging in Gaza. It also comes just weeks after we saw Iran launch this attack on Israel. Israel also striking Iran's diplomatic compound in Damascus. And of course, the reaction from regional leaders is going to have to be very closely watched as well. Raisi himself was 63 years old. He became president in 2021. He has been seen as a hardliner through the course of his presidency, and even viewed perhaps as a protege of Khamenei and a likely contender as supreme leader. So we're looking out to see the impact domestically and across the region as well, but a very significant developing story in the Middle East right now.
Dan, thank you very much indeed for that. Saudi Arabia's King Salman is reportedly undergoing treatment for a lung inflammation, this according to state media, which said he is suffering from a high temperature and joint pain. The Crown Prince Mohammed bin Salman postponed his trip to Japan, due to start today, amid concerns for the King's health.
I think it's fair to say we enter the week with heightened geopolitics. As we take a look at the markets as they wrapped up the Friday trade, we're bouncing from one record high to the next. And you can see the Dow still above 40,000 points by the finish, 134 to the upside, another 1/3%. So fifth positive week in a row is what we saw. Not quite achieving some of the peaks that we've witnessed, but still a lot of these major markets, if they're not at the peak level, they're thereabouts in touching distance yet again. So the other major markets for the S&P 500, for the Nasdaq this week, it is going to be a story around Nvidia, seen by many as a macro event now as the earnings roll through, given just how invested the market is in this key AI play. As you can see, technology taking a back seat in that Friday session. Somewhat underwhelming trade, perhaps a little bit of nerves coming into this week, and Nvidia actually the underperforming name for the likes of the S&P 500 and also across at the Nasdaq. Taking a look at the dollar, we finished up with a slightly higher yield story and a firmer dollar for the Friday trade, in contrast to some of the weakness we've seen. Morning session, sterling euro on the front foot, so leaving dollar a little bit weaker. You can see we've climbed to 127 plus on sterling. We're 108.79 on euro dollar, and dollar yen is perched a little bit higher, so that is where we are seeing some strength in the region. I want to take you to what we've got elsewhere, to WTI, Brent and gold, chasing geopolitical reaction after all the events over the weekend as we talk about Iran, but also events playing out for the Saudi king. At this stage, we're not seeing a huge oil reaction. Brent ticking slightly higher, up about 0.1%, but WTI, as you can see, showing us a fairly flat picture around the 80 handle. Spot gold, this is where it has been interesting. We've seen a record level even as we closed out the Friday trade. All sorts of different actions cited in the background, from Chinese buying to hopes that at some point we've got the Fed cutting rates and that impacts the yield story. But with some geopolitics today that we're contending with, you can see bullion prices ticked high, another near on 1%. To the Asian markets and Taiwan on the back of the election, you've got the TAIEX perched a little bit weaker, so slipping 14 points, 15 points at this stage, but elsewhere across the region. And it is a brighter start. We're chasing much stronger levels. The Hong Kong stocks higher, and also the Japanese market up 0.8%, Steve.
Super right. OK, our next guest says the world is at a tipping point with 5 key trends set to dominate the new world economy. And this is a book I'm showing you on the screen now as well. And we have physical copies with our next guest, Philippe Gigels, who is Chief Strategy Officer at BNP Paribas.
Yes, nice to see you. It's been a long time.
It has been too long. It's been too long.
Welcome
it tells
back.
us it's pre-COVID.
Yeah, but we took the time to write a book, so that's already something.
Well, I can see you brought in a number of copies to show us, and
absolutely.
Obviously it's a big day again as we talk about more geopolitical events playing out. We've got more data out this week on inflation, PPI. The markets are looking very closely at some of these metrics, and I think at this stage we don't know what's going to happen with central bank policy because of wildcard events. This morning we may have another wildcard event, we may not. How are you thinking about the world that we've got?
Well, it's complicated. It's like Steve said, it's on a tipping point, so a lot of things are coming together: geopolitics, oil, copper, gold, major bull market and commodities coming in, and then of course the central banks that are so key. And we call it in the book like the Lord of the Rings, one ring to rule them all, and that's the central banks, because in our world interest rates are like gravity. So when gravity goes up, everything is pulled down, and when interest rates come down, gravity comes down and everything can fly, and that's been the story for the last 20 odd years, and that's not going to change, I think.
I think the world's done its best to move on from COVID, but even in the weekend we're talking about new variants and what the impact could be, and in the data we're still seeing strange behaviours that linger since COVID. So what do we think about the anomalies now that central banks have to deal with as they get back to more normal data, but still dealing with some hot items, say in services inflation, in some travel categories, in insurance? How do central banks banks think about that data and whether it's even relevant as they set policy?
Well, I think it's been complicated because a lot of people think, okay, COVID was a one-off event and then we go back to normal. But we will not go back to normal, and it's one of the main things we write about. And central banks, of course, have to deal with all this data, have been doing this for 30 years now. This is the most difficult economy to read because everything shuts down, then you open up again, becomes complicated, so it's hard for them to read the data as well. No, I think central banks, and especially the Fed, they've painted themselves a little bit into a corner because they said, we're data dependent. So that means each and every time a number hits your screens here.
Sure, but I think that what they probably mean is the wider trend, right? But I agree with you, and as Mohammed does as well, that they've been giving us play-by-play commentary rather than actually a longer strategic vision. And look, I apologise in advance that we're not going to have long enough to do due justice to something that's taken up 13 years of your life. But the 5 key trends you're looking at is 1, AI is for real, innovation. 2, climate change. 3, multi-globalisation. 4, debt. And 5, ageing. We could spend a show literally on any one of those. And again, we'll get you back soon to talk about this. But in terms of what this book aims to achieve with identifying those 5 thematics, what is it trying to give a kind of almost the key to the door for our viewers to how to trade this or how to invest in it?
That's part of it. It's a debate because my colleague and I, Koen de Leus, we've written the book together. We debate on things because we do not agree, and we invite everybody to debate on the next 20 years.
It's a bit like Squawk in a book.
In a book, that's a very nice compliment. Thank you very much, because I love Squawk Box. But the idea is, in a way, also to prepare our clients, which are investors and companies, for this. Because you're in a world where inflation will be materially higher, interest rates will be materially higher, commodities will be higher and more volatile. So companies that work with a playbook of the last 30 years, I don't think that's going to cut it.
Yep. We have NVIDIA numbers out later this week as well, and your number 1 chapter is on innovation, and it says AI is for real, and something, again, we've been looking at a lot on this one as well. The problem is, to invest in NVIDIA at the moment, you have to pay for a stock that is trading on 35 times earnings. How do you separate the hype from the reality of even a magnificent stock like NVIDIA?
That's complicated, and the comparison is made with Cisco, because Cisco was 37 times revenues at the end of the internet bubble. So everybody says, okay, NVIDIA is 40, 37, exactly the same.
The charts are amazing, actually. If you look at Cisco going up to 2000, it's almost like a mirror image of NVIDIA. It's a mirror image,
and indeed, that's the heart of the routers and the switches, so the heart of internet. NVIDIA is the heart of AI. But on the other hand, we have a story in the book, and there's a lot of stories in the book where we say, look at the chessboard. It's 8 by 8, 64 squares, and the game of chess comes from India. And at a certain moment in time, the inventor goes to the emperor and he says, okay, I've invented a chessboard, so that's fantastic. And the emperor says, I want to reward you, what do you want? Well, he said, put 1 grain of rice on the first square, 2 on the second, 4 on the third, and so on and so forth. And at square 32, you're at 5 billion grains of rice. And that's a very interesting square, because that's the moment when the emperor still is emperor and the inventor still has his head. When you go to the other side of the board, basically the two are not longer compatible, and you know what happened, of course, the inventor's head has been chopped off. So that's, of course, when you're in an exponential world, when you do not 1, 2, 3, but 2, 4, 8, and so on.
You never told me it was a grisly horror book on the economy. That's exciting.
The one thing I can say, having attended so many tech events for so long, is that the disruptor gets disrupted. I mean, that is the most obvious trend I've witnessed over the years of going to tech events. And this particular case, we have every player pretty much across the board, some of them with very deep pockets, wanting to be in the AI space. It's hard to see that NVIDIA can enjoy its lone pathway, cleaning up every profit as it goes along in the chip space.
That's an extremely important point. And the point that you make is, if the Googles and the Apples and the NVIDIAs are the winners of this revolution, it would be absolutely the first time in history, because when you had internet, new companies came in and they disrupted everything. In the car industry, at a certain moment in time, you had 6,000 car companies. Even Belgium had back in the day a car company, but of course, then you get a disruption and 10, 15 remain. But like you say, this time it could be different, and I know these are very dangerous words in financial markets, because these guys have very deep pockets, and it could be that the Googles are the winners of the revolution. But what we have to say, and that's what we tell clients each and every day, is that would be the first time, because typically a new industry has new leaders, as new players. And up until now, it are the internet companies, the previous revolution, that are leading the AI. But we've never seen, of course, companies with a market cap of 3,000 billion. So that's something to think about.
Let me pick up on one of your other points, and this is around debt. Many of us are waiting for a long time for a little bit of inflation so we could reduce the debt pile. That was how it was meant to play out. Yep. But it simply hasn't, because there have been other extraordinary events around as well, namely COVID and the wars playing out, a pullback away from globalization, which has meant the debt pile has been actually getting higher. What happens next from here? Because the market has shifted its focus to other areas of concern, but at some point it feels like it circles back to the debt side.
It will definitely come back. If you look at the American debt pile alone, it's 35,000 billion, so it's huge. In my mind, and that's also what we write about, the only way to get rid of it is basically to inflate it away. But you cannot let inflation run at 8 and 9, but what they're going to do is they're going to run at 3, 4 and try to convince us that it's 2. And they will do it by saying, okay, 2 is not an absolute number, it's an average. So if you've been below it for the longest time, now we can be at 3, 4. And then if you manage to keep interest rates below that, you have financial repression. And then, of course, as investors, once again, you absolutely need to own real assets. And then in my mind, it's no big surprise that copper goes up, and real estate goes up, equities go up, gold goes up. Everything that's not cash is a good idea in that world.
The last book that was called This Time is Different was 2009, Reinhardt and Rogoff. So that's actually an interesting parallel with this book. We have to leave it there, but we'll get you back as soon as possible, actually, because I'm particularly interested in the section on ageing, which won't affect me, but
you don't age. But I have you one.
That's very kind.
Thank you much for having us.
And we'll put it in the pool library for the team as well once we've read it.
Yeah, I have fun, Mike.
Oh, bless. Well, that's amazing. Thank you very much indeed. Philip, lovely to see you, and we'll see you again very soon.
Thanks for having me.
Next time you're back in London, and we'll go through some of the other thematics on there as well. Lovely to see you, sir. Well done. No mean feat. Philip Zhizhels, Chief Strategy Officer at BNP Paribas.
Well, coming up on the show, Taiwan's new President Lai Ching-te takes office, facing the ire of Beijing. We'll be crossing to Emily in Taipei this hour. Also ahead, UK lawmakers and business leaders gather in the Square Mile for this year's City Week. We'll hear from officials making the case for investing in the UK over the course of the morning. And Ryanair posts a €1.9 billion post-tax profit and says summer bookings are trending higher. We'll be hearing from the CFO, Neil Sorahan, next.
Ambition to me is about doing better.
I think ambition creates a pathway.
The best advice I can give to someone starting off a career is don't have a career, have lots of careers, try loads of different things.
Talk to people and put your ambition out there.
I don't feel that I've hit peak ambition because it's a learning journey.
CNBC is where ambition meets opportunity. What does living ambitiously mean to you? Hear it from our CNBC anchors, reporters and global business leaders on CNBC.com.
So when Karen and I interviewed Johan Lundgren last week, I spent a lot of time, as I always do, we always do as a channel, comparing and contrasting with the rivals out there as well. And of course, the key player in this sector, and certainly in the low-cost carriers in Europe, is Ryanair as well. And the numbers have come out this morning, and it's tough out there. Recent pricing softer than expected, requiring more price stimulation than last year. Although the group's saying it's cautiously optimistic on peak summer fares, flat to modestly ahead. That's not quite as exuberant, perhaps, as it had been in previous years. I want to get to Neil Sorahan, who's the CFO, of Ryanair, and who joins us now. Neil, thank you very much indeed for joining us.
Welcome.
And I just mentioned to you off air, I spent a lot of time poring over your company compared with the best in class and indeed some of the ones who are struggling. And the pricing in the market of Ryanair is closer to some of the rivals than I've seen for a long time. Normally, and I say this historically, I've seen your shares traded at a premium to some of the rivals out there. Why are they not trading at a premium? And I don't want you to say specifically about the share, but do you think there's a changing attitude to the sector at the moment?
I don't think so. I think, in fairness, we've come out of COVID in the last couple of years. We've been performing very strongly. I mean, we just had our best ever year with 1.92 billion profits. Boards and ourselves, the management team, feel that there's value in the shares at the moment, and we've announced a 700 million share buyback this morning. which will run for about the next 6 months. So, I think there's an opportunity out there for us to buy back some stock, and the market will, do what the market does. It'll get around to looking at the valuation in due course. But I think all we as a management team can do is deliver the results, and that's what we're doing.
I like talking to CFOs because they're the ones who have to juggle all the figures that the CEO decides we're going to do this. And your capital requirements at the moment are renewed fleet, of course, correct. And I know you've got a young, greener fleet, and we've talked a lot about this with Michael as well. There are issues with pilot salaries in the industry at the moment, and the crew salaries as well. So that aviation fuel seems fairly steady at the moment. Plus, as you say, a buyback to kind of perhaps give a little bit more confidence to some of those investors as well. It's a very tight equation always, but at the moment, your priority is where?
Well, our balance sheet is rock solid. Our cost base is supreme. You talk about the competitor airlines. Look at the closest to us would be 40% higher on a per passenger basis. EasyJet were in last week, well over 100% higher on a per passenger basis. So we've got a really good, really strong cost base. Fuel, very well hedged. We're over 70% hedged into next year. We're going to savings of 450 million locked in already. So I think that's a very good place to be. Balance sheet, very strong, BBB plus rating, the strongest rating of any airline in the world. So our priorities have been very much restore the pay for our people after COVID, bring in pay increases, pay down the debt, and we've been paying down bonds. We now have 1.4 billion in gross cash at the end of the last year, and that's why the board now have the confidence on top of the ordinary dividend programme to actually return the 700 million to shareholders at this point in time.
Great. Can we get into what's playing out with the passengers? And looking at the revenue number, up 15%, average fares up 21%, ancillary, all the extras up 3%. But the numbers, if we look at them, it seems like it's been a bit bumpy because you had some of the big listing sites, Booking.com, Kayak removing you from those sites. So a little bit bumpy in terms of a reading on customer numbers and what this does for revenue. So just give us a clear picture as to how it's looking from your end versus some of that noise that came from the booking sites.
Yeah, you're right. We did have the surprising but not unwelcome removal of Ryanair from the OTA websites back in December. The customers all found us by the middle of January, and we've now signed up a number of approved OTA agreements with most of the large OTA carriers at this point in time. So we're integrating those into the system. The great thing now for the consumer is that they've got full transparency on the ticket price. They're no longer being scammed. Great thing for us is that we get the customer details. So if there are disruptions, if there are schedule changes, if something goes wrong, we're able to deal directly with the customer. We're not dealing with the noise afterwards when they haven't been informed about changes in the system. So that's going relatively well. As regards bookings themselves, the business is firing in all cylinders. Capacity is hugely constrained in Europe at the moment. We've got the Pratt & Whitney GTF engine issue, which is grounding a lot of A320 aircraft. We've got the situation where Boeing and Airbus are behind on the delivery, so capacity is going to be constrained for some time to come. We're taking in over 600,000 bookings a night, so people still want to get out, they still want to travel, and huge demand to fly.
I want to pick up on the online booking system because I'm debating it in my head. From a market's perspective, direct-to-customer is seen as a good thing. You get a better multiple in most businesses, so that can't be a bad thing. But negatively, you want to be accessible via all platforms. I'm sure some people actually want to do their entire itinerary in one place, booking the accommodation, booking the airline as well. So how do we think about that and what the consumer is doing, whether it does ultimately damage the business model that you're not available in some places that you could be available?
Well, as I said, we're taking in over 600,000 bookings a night. We'll have 200 million passengers in the next year, and we're going to grow to 300 million passengers over the next 10 years. So that there's no shortage of people coming direct to Ryanair, but we're more than happy to work with the approved OTAs to the extent that they're not scamming consumers. They're fully transparent on the fares that they're charging, and that we get the contact information so that when things go wrong, and unfortunately they go wrong every now and again, we can deal directly with the customer.
I always like to look at the popular press when I interview someone from Ryanair as well, because there's always a great Ryanair story as well. There's two here. I don't know whether to go with the Daily Mail. I called a Ryanair flight and saw so many people making the same £46 mistake. I don't think we're going to go there. I'm going to go with the new advice from Ryanair. Have you seen this one?
I want to know what the other one was.
You've seen this. Ryanair is now, talk about nanny state. Ryanair is now telling people to roll the clothes in your rucksacks and your bags rather than fold them.
I think that's very good advice for people. Do it myself all the time, Steve.
Do you really?
Absolutely.
You look too well coiffured and
I was in
neat.
the Boy Scouts. I learned that a long time ago.
So you're now telling people to roll their clothes rather than fold them, yeah?
Well, I think that's it saves on the ironing as well.
I was going to say, so you can fit more in, but then you have to pay more because the charges are higher.
No, we're helping you on the other side. They roll out when you get to your final destination.
This story is on many websites, including Yahoo News UK, Daily Express, of course.
It's good. It's good to see there's important things happening in the world.
Yeah. Well, look how we've degenerated in this interview. We started off on £700 million buybacks and 8 times forward, and we've ended up folding your clothes.
Tips on how to pack. Yeah.
You don't get that on the other channel. Lovely to see you, Neil.
Good to see you guys. Thank you.
And if when you do other interviews this morning, if they ask you about rolling your clothes, I'll be amazed.
Very good.
And Neil Sorohan is CFO at Ryanair. There you go, practical tips for our business community.
Come back and talk to us about some real numbers again.
Thank you.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.